Welcome to iGlobal Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. To start the week, the Australian dollar has ended by posting a dragonfly doji. Now this is bullish, and you can see from the previous one the market did rally from 74 up to around about 76. If this is the same pattern, unfortunately, we need to wait to the end of the week to get confirmation, as it is a weekly signal. Therefore, we may be a little bit late in terms of seeing it being negated, or if it's true. But nevertheless, the market for the start of this week is bullish after the exhaustion pattern towards the downside and rejecting the 13-month low is now looking towards 74, 60, 65. Above there, I am a seller and I do expect to see further weakness to eventually turn around and look back to the previous lows that come into around 73.20 to 72.55. Moving on to the euro, you can see that the market did take out the top side at 116.30.45. And with that resistance now crushed, is the market's looking to the next target, which comes in around 117.20.30. I believe the market is setting itself up for a bull trap. Now, what a bull trap is a false signal indicating that a declining trend in the euro has reversed and is heading upwards, when in fact the euro will be eventually looking down to the trend, which comes in initially to 114.85 and then lower down towards 112.80 that I have highlighted here. I am a seller on rallies towards 117.20 and I do expect to see the market fail. And what is a little bit concerning is the US dollar did reject the highs around 95 for the third time and now looking back towards 93.40 as it challenges 94, the figure at the moment. So a little bit of weaker US dollar is anticipated this week. And saying that, the dollar yen is under pressure as it challenges this level of 109.60. Now, previous level was at 54, the low. This time this morning has been 47, so we haven't fully broken it yet. But the technical implications are still heavy and therefore could look towards the region of 108.90 to 108.35. But I'm not getting over bearish down here in case we do get another rejection. Resistance comes in at 110.45. Well, the bullish outside range day in the sterling has given further gains on Friday and did reach a high around 133.15. It is viewed, though, that the market did retreat there very sharply, but I'm not abandoning this view of seeing a further upside test in the sterling this week. After last week's Bank of England's vote was a little bit more hawkish, where the voters from 7 to 2 came out to 6 to 3 that were in favour of seeing rate rise. So it is slowly coming to the fact that we will eventually see a move in the Bank of England's rates. Therefore, I do expect to see dips to be shallow to the start this week and look around 132.15 as a rebound. Gold also is firming up, as you can see here, from 1,255, and I do anticipate further strength to evolve in gold and then look towards the region of either 72 to 76 with the base seen at 66. Silver also holding up very well since the rebound from the $16.15. I still expect to see further attempts towards the upside and support minor at 35 at the moment. That's still firm at 15 with a cap around 60 in the intraday outlook. And rounded off with oil, well, the market did challenge the top side eventually and rallied 5% on Friday, but did open up 100 points lower this morning and now looks slightly on the weaker case. Therefore, a break beneath this level of 67.5 could see further weakness and maybe back towards the recent lows on Friday of $65 a barrel. Well, that wraps up for today. Thank you very much for joining me. As always, look out for the intraday report, and I hope you enjoyed the new start to the brand new week.